I'm going to make Elliot wave really simple. This book is really complicated, and I love it. Oh my goodness. Elliot wave principle. Basically, there's logic to it. If you're going to have a price that fluctuates and moves in a trend, there's going to be some things that are true. I can exemplify this with a crafting stick. Okay? Take a crafting stick, put it at an angle, say, hey, this is a stock price. Okay? This is a trend in stock price. Take a pen, draw squiggles. This is going to be the stock price. And there's going to be something true here, and that is that the sum of distance of the up squiggles will be greater than that of the down squiggles. And guess what? That's just the first rule of Elliott wave theory right there. That's it. What? Yeah. If the price is going to fluctuate up and down, but also move up generally, then you're not going to be completely retracing the initial move, right? And that's the rule for wave 2. So you've had a move in the market or in a stock price. It goes up. Well, the second wave comes down, and it just can't completely take out the whole move. That easy. It's that simple. Now, the third wave is a special wave because it typically extends. It can be the biggest wave. And if it is, we call it an extension. But the only rule for the third wave is that it can't be shorter than this wave. It can be equal to in height to this wave, but it cannot be shorter. So if the price does make a move higher, but overall it's shorter, is this shorter? Let's compare that. Yeah, that's shorter. And we see the price starting to come down, we get nervous because the fifth wave can't be longer than this wave, and that would mean our last little push up in our 5-wave structure would be forming a triangle. And this is where our ending diagonal triangles come from and such. You know, you see the price moving in a rising wedge like this, you know what's up. The pushes higher are getting smaller. And that's typically driven by this rule that the third wave can't be the shortest wave. And so if it's shorter than wave 1, if there is going to be a fifth wave, it's going to be even shorter than wave 3 and signals the end of this overall uptrend. So let's make it easy and not get complicated and just take a nice, big, strong, extended third wave. Let's use this one. Is this one longer? I've actually got to find one that's longer. You know what we're going to do? We're going to make this wave shorter so I can use this wave. There we go. Now we're talking. Excellent. Now the third wave is no longer shorter than the first. And then we always get a retracement because the price is going to fluctuate. It's not always going to go up. It's going to come down. So what's the rule for this wave? It simply cannot pass above the peak of wave 1. Just like on our popsicle stick, right? Eventually, some valley along here is no longer going to be passing over a prior peak. And that is what wave 4 is. Wave 5 comes in. And, it can do anything, really. I don't think there's really a rule for wave 5. But we do watch the nature of wave 5 very, very closely. Because if wave 5 fails to rise above this peak, that's actually very bearish. And again, in our stick example, where did my stick go? Imagine, that now instead of, hey, we have a valley that no longer passes a peak, we have a peak that no longer passes a valley. That's a downtrend, right? And that downtrend becomes true as soon as the price dips below. Really the 4 valley here, but if you get below here, you're really in. You know that the corrective wave is just wiping out all the progress. Okay, so basically that's what forms a motive wave, and to draw a channel through here is very appropriate, right? Because as soon as we have 3 points, 1, 2, and then a higher high, right? We now have a series of higher lows and higher highs. We can draw the uptrend. And we can put our popsicle sticks down. Let's draw the uptrend. You're going to see wave 4, right, may not actually come into contact with the bottom of that channel. But it just depends on how long the channel is, right? Because maybe it comes way down here. And in this instance, we have wave 1, wave 4 touching. That's okay. There's support there. And then maybe we get a bounce for wave 5. And then, yeah, like I said, we're going to be watching the length of wave 5 because it matters a lot. Yeah, nice. So let's see here. 1, 2, 3, 4, and we'll just say wave 5 sets a new high. Awesome. And let's show the top of that channel with red sticks. And it's going to be parallel to the bottom channel trend line, which is actually set by waves 1 and 2. So when you do this, waves 3 and 5 very typically pass beyond or outside of the channel. This is common. The RSI is typically overbought at these locations. This alone is like a great example of what a motive wave is when you see a strong push higher. So what happens when the price is actually coming down? Well, it's no longer in a motive 5-wave mode. It's in a corrective 3-wave mode. Those are typically labeled A, B, and C. In Elliot wave analysis, they are. I call them 3 waves sometimes, which I just stopped doing because I want to talk just about third wave of motive waves when I say that. So I should really stick to ABC correction language. Yeah, the way you talk about it matters a lot. Whew, okay, well, this is what's cool is that within each of these waves, there is a motive or corrective wave form. Wave 1 is motive. Wave 2 is corrective. Wave 3 is motive. Wave 4 is corrective. Wave 5 is motive. So you have 3 waves of motive because we're making progress, and those are going to be greater in length and height than those waves pushing down. There you go. What if that's not the case? Okay, so let's talk about correction. I'm gonna just let's pretend we're zooming into this second wave. This second wave is going to have a little 3-wave structure in it. Possibly it could be a triangle. Again, we're not going to get too complicated. We're just going to say simple 5-wave motive wave, simple 3-wave correction, which is ABC or a zigzag. We're going to zoom in and show that. Okay, well, no, the price dissolves. So you had your uptrend coming in, right? And suddenly, we'll use this one. We get a reversal. Oh no. And this was coming in. We had a dip for 4, wave 5 came up, and now we have a downtrend, a push down below that prior valley. All right, that's like me flipping the popsicle stick the other way. Suddenly we're looking at a motive wave heading lower. Well, we kind of just draw a line where the motive wave stopped and the corrective wave started, and we start the rules over again in a way. In a zigzag, you're going to have a corrective bounce. All right. And again, in a zigzag, you're simply not going to have the price retracing all of that first move, right? You're not. So you have a push down and a push higher. If the price does push above that prior high, you are no longer in a zigzag. You are in a different corrective pattern, which we do not need to go into here. And if you do find yourself setting a higher high, you're going to want to scrutinize the Elliott wave degrees smaller to understand what pattern you're in. So when you do see the rules breaking like that, you zoom in and observe the structure, and then when you zoom back out, it'll make more sense. But right now, we're going to say you had a little bounce, and as soon as price passes that first valley, all right, we are now in a downtrend, right? And that's basically it. This is your basic motive wave or corrective wave structure. And again, remember, before this was 1 stick. Now I've made it 3 sticks. These 2 waves, the first and third, waves A and C, these are 5-wave structures as well. Because now we're in a downtrend, right? Remember what I was saying about actionary waves? Actionary waves agree with the overall trend. Well, the trend is now down. So these waves are going to be 5-wave structures. Incredible, right? Incredible. At some point, you get a trend line break, okay? And this is where things get really tricky, because how do you know if this is a true trend break or not? And the truth is going to be that it's going to be by looking at the subdivisions of this wave. If the subdivisions of this wave show a 5-wave form and it's motive, that means that the overall trend has changed. It has changed, early signs of a change, right? And you get that because now you're setting a series of higher highs and higher lows. So this is pretty complicated, and the corrective part is always, of course, the most difficult to understand. But I hope that clears it up a little bit. This is kind of longer than I wanted. It's like 10 minutes, but hey, I'll have to do some more, because what happens if wave 3 is not as long as wave 1 and wave 5 is even shorter than wave 3? We get a triangle, right? But what happens if, and then what happens if, and then what happens if, and there's a rule and an analysis for all of those things. So for now, I'm out of here.